let's dive into choosing a good stock. It's not about luck, it's about strategy, like basing decisions on a decade of data to really see how a company's been performing.
Yep. Right. So you're saying it's kind of like checking a car's history before buying a used one, right?
Exactly. It's like, you wouldn't buy a used car without its service record, so why buy a stock without looking at least 10 years of financial data? This history lets you know if the company can ride out the ups and downs.
And we're talking about more than just looking at the revenue. They also mentioned those 5 key performance indicators, right?
Yes, yep. Those KPIs, revenue, profit, free cash flow, book value per share, and return on invested capital. If they're showing more than 10% annual growth each year through that decade, you're looking at a company with real staying power.
Yeah. Okay, so that's tip 1. Now, what's the second tip about?
The second tip is buy what you understand. Basically, stick to investing in industries you get. Like if you're into tech, then look at software, or if you're all about renewable energy, go for that. It means you have a certain level of comfort and intuition when market noise comes in.
But don't you think that's a little narrow? I mean, sometimes stepping out can bring unexpected gains.
True, I get that point, but the idea is to reduce panic when there's market volatility. If you understand the business, like knowing why Tesla can handle a bad quarter because you get electric vehicles, you're less likely to freak out.
Right. I guess that makes sense, even if it might not be the strategy for every investor.
Exactly. It's all about building confidence with what you know. So if your stock dips, you're not just guessing, but actually reasoning through if it's just media noise or something more.
Cool, cool. And then the third tip is about following strategically, isn't it?
Yeah, tip 3 is follow strategically, skip the noise. Instead of relying on general media that's always a bit delayed, you monitor the stock through real time sources like social media, industry insiders, and even paid in depth analysis from platforms like Seeking Alpha or
Yeah.
Motley Fool.
So you're effectively chasing the news before it becomes yesterday's headline?
Exactly. It's about catching real signals, for example. If a biotech stock you hold is about to see a surge because of a clinical trial update, tracking those on X or LinkedIn can give you an edge.
And pairing that with the rigorous metrics we discussed earlier seems like a pretty solid playbook.
For sure. You tie it all together. Start with a company that's got a proven track record with a decade of data. Make sure you understand and resonate with the business, and then strategically monitor it to act before the mainstream catches on.
Yeah. It's like creating your own little ecosystem of smart investing, isn't it?
Yeah, it's like building a portfolio with purpose, meticulously checking fundamentals and staying ahead of the noise. It's a marriage between numbers and intuition.
Right. I love that approach. Practical yet strategic. Thanks for breaking down these tips. It's definitely given me a new angle on stock picking.